Is the labor market beginning to crack? Jolts coming in much weaker than expected. We also had some comments from Neil Kashkari, which I think are interesting, and we'll dive into that. Today is Wednesday, September 3rd, 2025. If you like the video, maybe give it a like. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Been an awesome week already in the trading room. A couple more scalps off today too. And like we talked about in the daily video, or excuse me, the morning video, which some people say best value on YouTube, is very, we talked about the just the idea of not chasing this rally here, and or I should say, really any move, chasing momentum, and that's what today was. So gap up, fade, little pump into. This is a free level that we gave out, 64.50, and that was, you could have shorted that, and I chickened out. I didn't short it, but you could have taken it pretty much all the way down up until we had an ODT ramp at the end of the day. And how do I know it's ODT? It just is. You just have to trust me. But no, in all seriousness, this is how, and this is why I always say you don't want to trust those like Wall Street reports, like JPM and whatever. Jane Street, whatever else that, retail is doing this. No. This ain't retail. This is a machine gun. Look at this. Milliseconds, right? Machine gun lots just firing off. 1, 2, 1, 2, 1, 1, 1, 1, 1, 2. And then these reports say, retail is buying. The retail ain't buying that. No. There's billions and billions of contracts there. By the way, retail buys SPY, not SPX, because they can't afford SPX, right? I'm getting sidetracked here, but that is a pet peeve of mine. And they love to push those narratives out. So just something to be aware of. But yeah, Neil Kashkari, what was he saying? Basically, we can flip back over here. This is me reading between the lines, by the way. We have every reason to believe there will be a gentle cooling in the economy. Okay, the Fed, a government official is not going to say that. They're not going to say anything about cooling. Why would you say that right now? Like, why would you even come out and make that statement? The answer is, this is what they do. They like to prep the market for these things. He's not just seen the JOLTS data. I'm sure he's seen the non-farm payroll number. On one part of me is saying that, okay, Trump fired the BLS head. It's going to be a lot. They're gonna cook the hell out of that book. They're gonna get it a 5 sigma beat. But now it's like I'm looking at this in Neil Kashkari. Why would you say that? It seems like he's trying to say, like, yeah, basically prepare for a big miss, right? So we'll see what tomorrow if that's the case. And the reason why I even bother putting, normally I don't care what the Fed heads say. They speak with so much noise so often. But you'll recall, you can go back and watch. I talked about it in 2021. But Yellen, when these government people, Fed and Treasury, then they say certain things, you got to pay attention. I remember Yellen back in 2021 saying, actually, you know what? Higher interest rates would be good for the economy. And she said this like 3 or 4 times within like 2 months without being asked. And sure enough, rates went a lot higher, right? That's their way of telling you, like, listen, pay attention. I'm trying to tell you what's going to happen. Right, so I think Kashkari now acknowledging that maybe we get soft data. Do we really care as traders? No, not really. But I think it's interesting. It could kind of go either way here. Tomorrow, it's definitely firmed up a little bit on the spiders for tomorrow, and you can see not that right here. It's pretty neutral. So it was a lot weaker. It's definitely a lot more neutral. I think you still have some tails down below. I'm sure you do. Yeah, so there's still a big tail down at 630. And Friday still is pretty weak, but it is a little bit better than it was. Now that we've kind of had a 2 consecutive, well, not consecutive green days, but we've had a nice bounce here. And the Qs were stronger today, to be fair. Obviously off the back of Apple and Google. But here's the other thing. If Apple and Google aren't up 4 and 10% respectively, I think this market's probably red today. Outside of that little pump there at the end of the day, breadth was not great. We did finish with 222 advancers, but again, it was really kind of that end of day move, and the SOX was down 1% at one point. So I don't like propping up two Mag 7 names to sell semis. I don't like that that configuration. That said, again, it doesn't really matter. All that matters is how the market responds to the data here. And again, there is still a right tail if we get like Goldilocks, or I would say we're coming into a point now where bad news is bad news again, and good news is good news, right? We know the rate cut is a thing, but that narrative can shift very quickly. If we get a huge miss Friday, and they're only forecasting like 73,000 jobs, so it's going to be hard to miss. But if we get a miss, I think the market won't like that. The market won't say, "Oh, rate cuts are good." We already know rate cuts. The narrative will shift to, "Oh my God, the Fed's not cutting fast enough." So it's just some things to consider here. So all in all, today was kind of a wash. We just got a couple of scalps off, ironically on Apple and Google, long at 230, just a break at 235, and that bounced nicely there. And then Google actually a little short at 230 this morning, and that was a nice little trade there. So just kind of kept it on the easier side. I figured ES would not do a whole lot. It just kind of went up and down, and it's not something I want to be involved in. The volatility will be tomorrow. That said, gold continuing to rise here. And I still have my UGL runner. And it is off the highs here, but this can still get to 330. And my guess is if we get a soft number tomorrow, they'll try to gap it above there. I think that would make me a seller. Why not? Let's just talk about silver. There's SLV off the highs of the day there, and silver, up 61 basis points. But yeah, gold's still strong. I know it's overbought. It's extended, but I'm not ready to take the other side of that trade. That's for sure. Not yet anyway. But GDX up nicely. GDXJ, SIL. By the way, SIL. I mean, for what it's worth, that's a monthly chart breakout confirmed. But anyway, Qs here. Big line in the sand, 560. In fact, if you want to know, let's get it more precise. Look at the NQ here. You lose that green bar on a close, or these lows, like let's just call it 23,000. This should probably head down into these moving averages down here and retest this trend line. Don't like the lower highs, you guys know that. IWM was weak on the day. Still has a bull inside bar. So it still looks all right. I would just be careful here because it kind of reminds me of this big pump here last year. But innocent until proven guilty with it. Dow, same thing. SMH here got a nice broadening pattern, but it's holding 280. Little head and shoulder there too. Has not triggered yet though. And I'm not seeing it all over the internet. I'm not seeing everybody talk about, I can't believe it, but I'm not seeing all people plaster head and shoulders and stuff like that yet. So that does kind of lead me to believe that maybe it will work. Usually everybody won't shut up about it, and then I take the other side of that trade. But this time, not so much. Anyway, IGV trying to get a higher low here. Keyword trying. Transport's a little weak on the day. Not much doing there. XHB and IYR still holding up here. I like IYR less. XLF off the highs. But, came back by the end of the day. KRE, flat to positive there. Broker dealers flat to positive as well. No changes. Oil certainly acting like we're seeing labor market weakness. Basically a failed breakout. I mean, it didn't engulf, but it's pretty close. Possible 3 lower highs too, so be careful with that. Energy stocks backed off today, but they were a little overbought anyway. And look at where XLE finished. So right into that line there. So XLE coming in, XOP and OIH all down today. Dollar index down 23 basis points. You'd think it'd be down more with the that weakness in the JOLTS data, but it held up. Obviously, we talked about gold, platinum continuing up, palladium right back to 1200. So nice range. Technicals respecting there. Copper still struggling with 462. If you go through that, it can squeeze up. But again, big sell-off there. That was tariff related, obviously, but has not done anything since. So copper's another thing that really hasn't. I mean, yeah, obviously the tariff stuff is important, but you could also make the case like, oh, maybe economy related, labor market related. Really quick, one other thing here before we talk about ETH. Yeah, I forgot to cover rates, but I was going to cover the yield curve. But you can see rates down today. Everybody seems to have forgotten about the yield curve, right? There's the 3-month 10-year. There's the 2s, 10s. This has been uninverted for a year now. So just be aware of that, I guess. Nobody seems to care anymore, but it's uninverted and has been for a while. There. So yeah. Anyway, back to here. Bitcoin, yeah, held up nicely today, bounced, and we figured there'd be a little bit of bear trapping going on this week. We talked about that yesterday and over the weekend, and you can see ETH here holding up well. If you can get through 45. It's got some upside. Again, I still like the chain on ETH, possibly to $35. We'll see what happens tomorrow. It's going to be heavily dependent on this data here, though. But crypto rebounding, I'm not so sure it's going to make new highs right now, though. That said, yeah, markets closed right where we thought. 64.50. We told you guys that was a big level. Again, a lot of people bought this dip Friday instantly thinking like, oh, free money Monday, gap up, gap and go, new all-time high. And they got trapped, so we had to back off, right? Chew through some of that supply. Now if it wants to attack that tomorrow, I think it could break. I mean, it's done enough consolidation to get through that. The key is, does the market freak out if we miss jobs? So it'll be a big one tomorrow, and then the bigger one on Friday. So it should be a lot of fun. So good trading out there. Anyways, I'll wrap it up here. You guys take care. Have a good afternoon. Come find me on carnivoretrades.com. I'll see you guys all tomorrow.